forexbrokers.net here, and this video goes to the Bollinger Bands Indicator. In fact, we will build here a series of 3 videos explaining this indicator. This is one of the most popular trend indicators in technical analysis, available to all retail traders on all platforms, but also this is an indicator that has applications in volatility measuring, and also acts as an oscillator from time to time. It is a fascinating indicator, including the way the bands are calculated. In the article that comes on this topic, you can find the formula used by John Bollinger to calculate this indicator for quite some time now, and various strategies exist and may apply here. Keep in mind that everything that we discuss here is applied on the FX market, but can be used on other markets as well, as long as there is a chart and the availability to put the indicator. Now, this Bollinger Bands on the MetaTrader as an indicator appears under the trend indicators. It is right here, the Bollinger Bands, and if you select it, you will have the parameters of this indicator. The period is 20. It means that before plotting any value for the 3 bands that it has, it considers the previous 20 periods. So if this is the 4-hour chart as it is here, it will consider the previous 24-hour chart. Apply to close, as this is the standard interpretation, but it can be changed depending on your strategy. And it uses a standard deviation of 2. In the article I explain exactly what this standard deviation. I won't like to discuss it here because you probably are more interested on the technical setups rather than how this indicator is built. It has 3 bands: the upper Bollinger Band, the middle Bollinger Band, and then the lower Bollinger Band. The interpretation or the idea of this indicator is that any time when price remains between the middle Bollinger Band and the lower Bollinger Band, this is called a bearish price action or a bearish trend, or the other way around. Every time the market spends or rises between the middle Bollinger Band and the upper Bollinger Band, this is called a bullish trend. So a bearish trend, we gotta go short. A bullish trend, we gotta go long. That's pretty much what this Bollinger Band is. But the problem is that as a trend indicator, it works very well when the market trends. But the market doesn't trend anymore. Let's say the market doesn't trend all the time, and therefore what we need to do is to develop a system or to use these properties of this indicator in such a way to make the most out of all markets, both ranging markets and trending markets. The Bollinger Bands indicator, the middle Bollinger Band, usually is an EMA. You will see on, if you check the article on the moving average, what's the difference between the simple moving average and the exponential moving average and so on. Usually it is an EMA because it follows price a bit closer, reducing the lag between the price action and the price. What's interesting on these bands is that they cover the price action for more than 95%. It means that the price remains between the upper Bollinger Band and the lower Bollinger Band almost all the time, which makes it very interesting. These situations or these levels where the candlesticks close beyond this upper Bollinger Band or the lower Bollinger Band. There are many trading strategies. 3 of them we will discuss here. The first one is called a 2-with-2 scenario, namely in a rising market or in a falling market, because the rules are similar on both markets. So in a rising market, what you need to do is to determine the rising trend. Remember, the definition of a rising trend is that the price remains into a bullish trend between the middle Bollinger Band and the upper Bollinger Band. So this is a rising market. So in a rising market, what we have is price evolving between these bands, and the focus sits with the middle Bollinger Band, where we want to add on the long side. So we see the market breaking beyond the upper Bollinger Band, then finding support on the lower Bollinger, on the middle Bollinger Band. It makes a new higher high, and then when it comes again to the middle Bollinger Band, what we need to see is the 2v2 formation. This is a formation made out of 4 candlesticks, like the name suggests, and these 4 candlesticks are, the first 2 ones are similar, bearish, and the other one bullish. The focus remains on the middle ones. You need one candlestick to close below, to open above and close below the middle Bollinger Band, and the other one to reverse and closes above. And obviously the previous one is red, the last one is green. So 2 red, 2 green, we go on the long side on the second green candlestick to make the most of the rising trend. Ideally you will find out doing exercises and simply checking historical prices and so on, you will find out that there will be little or no pullback after such a pattern. How to use it in terms of money management? Well, it's very easy. Either you use the entire length of the signal candlestick here or the entire pattern, and you go for a risk-reward ratio of 1 to 2. So this would be your risk, and this could be the reward. 1 time, 2 times. So by the time that the market comes here, the take profit is reached without challenging the entry price, without a drawdown and so on. And by respecting these money management rules, then you will make the most of any trend before reversing. And sometimes on money management, as we will discuss later in this Trading Academy, it is wise to wait for the 1 to 2 risk reward ratio and then to trail the stop at break even, or maybe even a bit higher, to ride the trend moving forward. So this is one strategy, the 2v2. Obviously in a bearish trend, you wait for the bearish trend, then you see, you check the conditions for the reversal pattern on 2 bullish candlesticks followed by 2 bearish candlesticks, and you go on the short side on the last candlestick in the pattern. Is this, with a question mark, is this a signal as we discussed so far? Well, the answer is no, because the candlestick in the middle here needs to close beyond or above the middle Bollinger Band, which is not the case. So we have what? We have one candlestick here, another one here that closes below the middle Bollinger Band, but this one fails to close above, and then the market rises in a pattern that doesn't respect all the rules. Stay tuned for the next 2 videos. The next one follows an interesting strategy, and the last one we will explain how the Bollinger Bands acts as a volatility indicator. Stay tuned.